Everyone talks about offshore structures, guys, but most of what you see in articles on YouTube is probably outdated, illegal, or just doesn't actually work in practice, okay? Even if you take some of my videos and took them to practice, you know, there's extra stuff that you have to do, and that's why we obviously have to work with the client directly, okay? So today I'm going to actually show you a structure that actually works in 2026, okay? One that's compliant, defensible, and essentially used by entrepreneurs doing things properly. No gimmicks, no grey areas. Okay, so I'm Will Hodgson. If this is your first time to see me, then nice to meet you, okay? I'm a co-founder of HPT. We help entrepreneurs, business owners, high net worth individuals navigate through asset protection, minimizing their taxes, and again, removing the scrutiny from a lot of the structures that we do see online. Now, today I'm going to walk through what is not theory. This is the kind of structure that we do implement for clients regularly. Again, you can become a client down below, hpt.group/apply, top of my head. And again, you're going to see why each piece of the play exists and why it actually works. So before I show you what works, let's talk about what doesn't. Most offshore structures fail for 3 reasons. Number 1 is no substance, okay? Companies there on paper, but in reality, nothing is real. No employees, no office, no genuine activity, no local directorships, very common in creating economic substance, and tax authorities see this immediately, okay? Second, the owner's personal tax residency doesn't fit, okay? This is very common. If you're living in the UK, for example, it is pretty hard to work with you. Yes, we can work with you in ways where we deal with the Isle of Man and Guernsey. There are some clever things we can do. Even in today's world, in 2026, we are still working with clients in the UK, especially Jewish families, typically speaking, one in particular I'm just thinking of. And yes, we are being direct from a legal counsel about the Isle of Man and Guernsey, so I've learned a hell of a lot about what we can do in the UK, even if you own a property there, how you can transfer it to, let's say, a holding company, and then Airbnb it to yourself. Now you don't have a permanent establishment, something I learned very recent, a few days ago, on a meeting with a legal counsel from Guernsey, who is a UK tax advisor. Okay, so most offshore structures do fail, actually, and that's for a reason, because they're not set up properly. Secondly, the owner's personal tax residency doesn't fit. And thirdly, the structure doesn't match the type of business, I would say, if that makes sense to you guys. So people set up BVI companies because they heard, you know, they got a YouTube channel or something, they heard about it. They're like, oh, I'm going to put my YouTube revenue through here. It doesn't actually fit with their operations, you know, their clients or banking needs. So you need a structure that addresses all 3 of these concerns. Okay, so let's go back through those 3 concerns. It is economic substance, e.g. position of economic management. Number 2 is the personal tax residency. And number 3, the right business, so the company suited, the jurisdiction suited for the right industry. For example, if we're speaking about iGaming or this, we're on about Malta, Gibraltar, Anjouan, Curacao, for example. When we speak about, you know, e-commerce, where you're importing from China, straight away Hong Kong shouts at me, okay? So those are the 3 main things to understand firstly, if that makes sense. So here's a structure. I'm going to overview that I've worked with a client directly. I helped him set this structure up, and again, you can go ahead and work with us and apply to become a client down below, hpt.group/apply. Now, I'm not going to do any magic editing or anything here. I'm simply a normal person just sharing my work, how we've worked with clients, and what we do for clients around the world who are generally international business owners, crypto investors, X, Y, Z. Okay, typically high net worth individuals or earners above, you know, $500,000 a year. Typically, those are our clients, if that makes sense. I don't really like to work with clients who earn below 200K a year. It's just not really feasible, you know, for a lot of the structures which we will be suggesting. Yes, you can have some cost-effective solutions. Yes, we'll always try to work with you. The team might help you out, but me personally, I prefer to focus on worthwhile projects for myself, as I'm sure that you can understand as a business owner yourself too. Okay, so let's speak about this structure. This structure has 3 layers. At the top is a BVI holding company. In the middle is Hong Kong, and it's also a resident living in the UAE, so on the side he'll have an Ajman consulting company. Very typical, we see this, okay? Each piece serves its own specific purpose, okay? None of them work in isolation, and let me break down each one. So UAE personal residence is where, you know, a lot of people go wrong, because they obsess over corporate structures while they ignore where they actually live, okay? Where you live makes things much easier for us. If you live in the UK, it is expensive and a nightmare to create that economic substance abroad. If your personal tax residency determines how your tax on the income you receive, salary, dividends, distributions, X, Y, Z, okay, from your companies, if you're a resident of the UK, it doesn't matter if your company's on the fucking moon, okay, or in the fucking BVI, or on the fucking Mars, okay. When the money reaches you, you are paying UK tax. Get that clear. I'm fed up of people messaging me saying, hey, I live in, you leave the fucking UK. If you don't like the tax system there, personally, then leave the bloody UK. It is so simple, okay? There's lump sum programs in Italy, Greece, X, Y, Z, okay? So your personal tax residency determines how you're taxed on income, the foreign company controls, what you can own, salary distributions, and again, they are attacking your wealth. You already know that. You've seen the articles. You know the figures. You know the new laws. It's pretty obvious. If you don't, then I don't know how you own a bloody global business, okay? So, simply speaking, first step, change your residency. This is how we help clients as well. We obviously help do that. We've moved clients to Paraguay. We've moved clients to Italy. We've moved clients to Switzerland. We've moved clients to UAE, Abu Dhabi. We've moved clients to Qatar, Kuwait, Hong Kong, Thailand, Bali. We've done a fair share of client moving, okay? So first step is establishing a very low taxation person. So let's do UAE as the example. 0 personal income tax, no tax on dividends, no capital gains. When profits flow from a structure, you receive them as you got them, okay? But this is critical. You actually need to be a resident, This does not mean having an Emirates ID, such as I have right now. I still have my Emirates ID. Am I in Dubai? No, am I tax resident there? Not anymore. Okay, so you need to spend enough time there. Typically, you can't just get a visa and keep living in London. That's not how it works, mate. Tax authorities will see your economic choices are being made through London. They can see your travel history. They know you're there. Again, they can tie more things to this, such as a house and other statutory ties, whatever they say on the HMRC website, okay? So that's first, your personal tax residency. Example, you're now in Dubai, okay? Now, let's speak about the operational company. So you've already got your Dubai company, Ajman, that's how you got your Emirates ID, you live in there, you've got your apartment, you're sat in the marina, you're sat in JVC, you're sat in JBR, whatever they're bloody called now, or even a palm. You're a big baller, you're sat on a bloody palm, mate, okay? Now, or even the Emirates Hills on the golf course, right? Now let's have a look where the business happens, and that would be Hong Kong, typically speaking. It's a real structure, right? I'm speaking out right here, we've done for many clients around the world. This entity is what actually works, okay? It signs client contracts, it issues invoices, it receives payments, it does X, Y, Z, okay? And it holds the working capital, okay? Whether it's employers, suppliers, it's likely to be engaged through this Hong Kong company. Why Hong Kong? Number one, territorial tax system, okay? Profits are only taxed if they're sourced from Hong Kong. So if they're from overseas, your clients are overseas, this is a game changer for you. You can apply for the exemption. And again, you don't need to have an office there. You don't need to have an employees. You can make an offshore claim and pay 0 tax on those profits. This is legitimate and it's very well established. People have been doing it for decades, okay? Really good choice. Second, credibility. Look at my LinkedIn. I'm in Hong Kong, right, where I'm actually sat right now in Bali. I live split between the two. But again, you've got clients, banks, payment processors. They take it seriously. Very key here. You won't face the same friction that you would do with a Seychelles company, for example, or British Virgin Islands, okay? So third, banking, okay? Best banks in the world, arguably the best banks. You've got Switzerland, Singapore, Hong Kong, very good. Also one of the richest places in the world as well. So the Hong Kong company earns revenue, pays its expenses, and what's left is the profit. That profit can be paid into the holding company as a dividend. So where would this holding company be? Now, hopefully you understand where you are, the operational company. Now let's have a look at holdings for a few reasons, including asset protection. Okay. So BVI. Above the Hong Kong holding company I was just on about. I know it's hard to speak about this without the diagram in front of me. I can, if you want the diagram, let me know in the comment section. I'll do a screen recording next time, right? Whatever the YouTubes want, let's go. So this is the shareholder of the Hong Kong entity, and I'm on about now a new BVI holding company. First, asset protection. It creates a big layer between the operational business and the ultimate owner as well. So again, it separates those two assets. If there's a lawsuit, dispute, creditor claim, it's quite hard to get to actually, especially if there's other structures, other layers as well in this as well, which we can get into or you might have seen on other videos. Second is flexibility. If you ever want to sell the business, okay, you can receive the money in the holding company. Highly beneficial, okay? Which is why I make businesses, to sell them. I'm going to be very transparent there. I want to sell all my businesses for a great worth. I'll scale them until I'm happy with the valuation, okay, until a PE firm comes to me. The BVI isn't doing any trading, it's just holding shares. Let's get this right, okay? And that's all it needs to fucking do, simply speaking. So let me walk through how the money actually moves in the structure. A client pays you from Europe into the Hong Kong for your services. The Hong Kong company receives the funds into its bank account, pays its expenses, contractors, software, travel, whatever it is. What's left is a profit. At the end of the year, the Hong Kong company prepares audited accounts and files for an offshore claim. That offshore claim is with the Inland Revenue Department. If successful, no Hong Kong profits are due on taxation, and the Hong Kong company declares a dividend to its shareholder. That is the BVI holding company. No withholding taxes apply. The BVI holding company receives the dividend. No tax in the BVI again right now. Fantastic stuff. Now that is the flow. Revenue is earned, expenses are paid, profits are passed up and received personally, all without a leakage at any layer, okay? So now we're going to move on to what makes this defensible, okay? There's a huge, important part at play. Substance. I would like to change this topic of economic substance or position of economic management to economic fucking substance, excuse my French, but it's very important, okay? It has a bank account, invoices clients, has contracts, has a record of the work performed, where our contractors engaged properly, okay? Whether it's local directors, X, Y, Z, there's certain elements at play. Every solution is custom, okay? For example, if you're in the Isle of Man, you're trying to live in the UK and use the Isle of Man as a holding structure, you're going to have to, leave the lights on there as a simple expression that we do say, okay? Now, yes, there's more to that, but that's simply speaking, and I'm not going to speak about this, I've spoken in other videos, economic substance is key at most layers, okay? So your UAE residency is genuine, you live there, you've got the apartments, your lights are on, your heating's on, you're bloody in the UAE, okay? And your life is based there, okay? You're not secretly still living in Manchester, while pretending to be in Dubai, Everything is documented and filed properly, your travel records are clear. The Hong Kong company files accounts, applies for your offshore status correctly, and maintains records, okay? The BVI company has proper corporate records, and you file tax residency certificates if needed over in UAE. There's no deception. You're not hiding ownership. You're not lying where you live, okay? Or pretending the business is something it's not. You're using jurisdictions that offer legitimate benefits, okay? And meeting the requirements to actually claim those benefits, right? Now, what makes this defensible is if a tax authority asks you questions, you have the bloody answers. Real answers backed by real documentation. So again, who is this structure for? It's not for everybody. Let me be clear about who this would actually fit into as such. If someone's generally mobile, not tied to a country, willing to actually relocate and build a life in UAE or another tax-efficient jurisdiction, if you're not willing to move, this is not for you, okay? If you've got a local business in the UK, it's not for you, mate, It fits someone with an international business. Let's be very clear about that right there. Clients in multiple countries, suppliers in multiple countries, services are delivered remotely. There's no need to be physically present, essentially, in a high-tax jurisdiction. And if all your clients are in the UK, you only need to be based in London. Let's be real about that, okay? It fits someone earning enough just to justify the setup and maintenance costs. We're talking incorporation fees, registered agents, registered offerers, accounting, auditing, banking. For someone earning $50,000 a year, go away, mate, earn some more money. For someone earning multiple six figures a year, welcome to HPT. You can apply to become a client down below. And it fits someone who wants to do things. No cutting corners, no hoping nobody notices, and no grey areas, okay? Proper compliance, proper records, and proper advice. Very key there. Common mistakes I have probably seen, before I wrap up this video. Let's think about the common mistakes. Firstly, generally not relocating to the UAE. Secondly, is no substance in Hong Kong. Thirdly, the wrong structure for the wrong business. Maybe Hong Kong doesn't fit your client base, if that makes sense. If you're in e-commerce, your clients are global, right? Or majority Europe, in different countries, and you're buying products in China. Again, this is a fantastic solution, but maybe that's not the case with your clients or suppliers, so maybe it's not the right choice for you. Fourth, is ignoring where your clients are, basically the same thing. And fifth, not getting proper advice, trusting your local accountant who thinks he knows best, but he's only ever lived in one country, done work in one country, and now thinks he knows UAE tax laws. Bloody ridiculous. You know what I mean? It's bloody ridiculous. So, if you're thinking about building one of these structures, let's get in contact. I'm happy to talk, generally speaking. We don't accept every client for various reasons, right? But at HPT Group, we do help a lot of entrepreneurs. We've helped over 70 or 80 entrepreneurs globally, build scale companies and build international structures, trusts that holds up under scrutiny. Very key there. The right jurisdictions, the right entities, the proper banking and tax position that you can actually count on and defend. So that's why we are selective of who we work with, because it's not always possible to work with you, if that makes sense. We had an Israeli-British client come to us, they were doing their work in Ukraine. All the clients were in the UK. There's heavy GDPR and some of the services because they were working with a lot with schools. I said, I'm sorry, mate. Potentially, if I was you, I'd be moving to Israel 10-year free tax treatment. But I just couldn't quite, create a structure to work with them. We were looking at, I think it was not Armenia, Moldova. One of his business partners was living in Moldova. There's a lower corporation tax there, but it just came with too many problems. And if you looked at all the costs, he'd be saving like $7,000. It wasn't worth a headache for him. So we said, I'm sorry, we can't work with you. I've stayed in the UK. If you want to do something personally, I'd probably edge to a lower tax jurisdiction. Okay. But other than that, guys, hopefully that helped. And I thank you for watching. Please like, comment, subscribe, ask any questions. Feel free. I always look at my comments. And I'll see you in the next video, guys. Cheerio. Thank you. Bye-bye.